Hello friends, welcome to my channel Ticker Talk. So this is my first video and today's topic is the gold rally which has taken place from 2019 to 2024. Gold in the last 5 years has given a return of a staggering 150%. So in this video we are going to cover what are the factors which are driving gold higher, is the rally here to continue, and as an investor what should you do in current scenarios. Before we dive in, just a disclaimer that anything that we discuss in this video is purely from an educational perspective and should not be treated as a recommendation. With that, let's dive in. So let's understand what are the factors which influence the price of gold. First, we have the economic factors, things like inflation. So gold is often viewed a hedge against inflation. So whenever inflation is higher, gold will rise in the price, and whenever the inflation is on the lower side, the gold prices will tend to soften. Second is interest rates. So gold itself does not have any cash flow of its own, it's just a commodity. So whenever the interest rates are higher, the opportunity cost of holding the non-yielding gold will often lead to lower prices, and the vice versa is also true. When the interest rates are lower, the opportunity cost of holding gold is lower, making it more attractive in terms of the value gains. Third is the dollar strength. So gold usually is denominated in dollars, and a stronger dollar typically makes gold more expensive for foreign buyers, reducing demand, and therefore the prices go downward. Similarly, if dollar strength is not there and dollar is weakening, at those moments you will see that the gold prices tend to go up. The second factors come are the supply and demand factors. So first on the supply side, uh, post 2018 and 2019, we have been seeing that the supply of gold from the mining that happens is actually constant or relatively in a declining trend as well, because most of the mines have been utilized and there are no easy available mines that are yet to be done. And overall, from an ESG perspective also, gold mining has a very detrimental impact on the environment. So overall, we have not seen that the post 2018, that 2018-19 was the peak of the gold mining output, and post that we have not seen the supply side going up. On the other hand, from the demand perspective, we have the four major categories for jewelry, for investment purposes, technology, and the central bank buying and selling. Out of all these four, the technology is very small one, so we'll not be considering in this discussion. Gold as an investment and jewelry does influence prices, but what is especially becoming a big factor in the recent times is the central bank buying and selling that has been happening, and we'll discuss that more in detail later in the video. Uh, Apart from that, one of the most critical factors for gold is geopolitical stability. So, whenever there is geopolitical instability, gold, which is viewed as a safe haven, right, for value, its demand goes up, and as a result, its prices will definitely shoot up in cases of whenever there is wars, political instability, and as a recent case, whenever there are sanctions imposed, and we'll discuss that also, that how that impacts and uh, how that drives up the value of gold. And fourth is the market dynamics, basically the demand for gold ETFs, speculation in commodity markets. So whenever the demand for gold ETFs as an investment will go up, the prices will go up. Speculation in commodity markets, in my view, can influence the gold price in short term, but not for a long enough period. And whenever import duties are levied in countries like India, China, where the retail consumption of gold is very, very high, at those moments also we see fluctuations in gold prices. A typical example would be somewhere around 23rd July when the budget was announced. Our import duties got cut from 10% to 6%. You can see what happened on that day. Just go on a gold chart and see what happened on 23rd July. Let's look at the gold chart and see how the prices have moved and what exactly were the years when the rally happened. So if we see closely from 2019, these prices started to move up. 2020, we all know that basically our stock markets took a plunge, and gold, if you see, can has risen in that particular period. In the period of 2021 to, I would say, early 2022, they remained stable, and then it has been almost a consistent rise till 2024. So both 2023, 2024 have given massive gains, and even second half of 2022 started giving the gold rally again. So we'll dive into the factors that what actually transpired in these years to drive the gold to such significantly higher prices. So let's discuss what factors came into play during this rally. First, we discuss the dollar strength. If you see this chart of the dollar index, which is the measure of dollar value against basket of six major currencies of the world, we see that in the year 2020, the pandemic year, the dollar fell drastically. And why did that happen? Because in response to the COVID-19 pandemic, the Fed actually had slashed interest rates to near zero, increasing the supply of dollars, right? But immediately in year 2021, when the economy started showing signs of recovery, in that year the investors anticipated that the Federal Reserve might begin tapering its asset purchases and consider raising interest rates, and rightly so, because that later on turned on. So if you see that this big rally, it actually happened because the Fed actually started interest rates, and it actually went up higher than the pre-COVID era as well. We'll see that in a later chart as well. Next, we discuss inflation. So if you see this chart, inflation dropped sharply in 2020, mainly because there was a collapse in demand, there was a lockdown. The crude oil prices also had tanked during that period, which resulted in a inflation drop. But post 2021, if we see, there is a sharp increase in inflation. That happened because post 2021, we witnessed a sharp demand resurgence, and parallelly, there were supply chain constraints. The commodity prices had moved really high, and the US Fed policies were also expansive in nature, as we'll see in the to support the economy during the pandemic period. But post that, if you see, the inflation rates have come down, mainly because US started rising the interest rates, and it went up to a level which is much higher than the pre-COVID era as well. But after that, we have seen the inflation being stable or slightly lower as well in 2024. It is the closest to the 2% inflation target that the US has right now. So, which allows them effectively to have some cuts in the interest rates in near future. So next we discuss the interest rate movements. If you see, in 2019, the US Fed was actually reducing the interest rates. So the interest rates came down, and when the 2020 pandemic happened, right, they had to slash down the interest rates to near zero levels when the quantitative easing again happened in order to support the economy. In one of the previous charts, we saw that inflation rose very sharply in 2021 because the demand came back and there were supply chain constraints, and inflation almost reached an 8% level as well. In response to that, if you see, the Fed started raising the interest rates, which went above 5 as well. But in 2024, when the inflation is around the levels which the US wants to, but it is still not at 2, it is slightly above that. But because in 2024 there are multiple indicators of the economy which started signaling that there might be a slowing down of US economy, that's why US is taking now a step to cut its interest rates further. So already 75 bps cut has already happened, as you can see, and in December almost 25 basis point cut is almost factored in by the markets. So 97% estimates say that yes, there will be a cut, but it will be more important on what will be the commentary for the upcoming interest rate cuts in the following year, that is 2025. Next, we discuss the demand from central banks. In my view, this is one of the biggest drivers for gold prices in the last 2 years. Now, if you see, the demand from central banks for gold used to be stable till around 2019. It saw a dip in 2020, mostly because economies were focusing on fiscal stimulus, financial stability, and so on. But post 2022, which is effectively when the Russia Ukraine conflict happened, Israel Hamas happened the next year, right? From that period, we see that the demand from central banks has been surging. Now, why is that happening? First, as we discussed, whenever there is geopolitical uncertainty, gold prices tend to go up and the demand also goes up because it is considered a safe asset. Second, I feel that when US imposed the sanctions on Russia and the $650 billion in US dollars that Russia had, they were effectively blocked and they could not use it even for trades. They could not use it for defending the ruble. Ruble depreciated sharply, right? So those factors led the central banks to think that they need to diversify their reserves from US dollar to gold, right? So that trend is being called de-dollarization, and I see India and China also participating in that. They have been heavily buying gold both in 2023 and 2024. If you see, this is how the demand in tons look like. In 2019, it was 605. 2020, I explained why it dipped, but then 449, and it went to above 1000 in 2022, and 2023 was again above 1000. As of 2024, it seems that the demand has still not slowed down. While I'm not sure if it would be crossing 1000 this year as well, but till September, the demand was approximately around 650 to 700 tons still. So it is effectively still higher even after record gold prices. The demand from central banks does not seem to stop. We'll quickly discuss the gold ETF flows as well. So we can clearly see that in 2020 the gold ETF demand had peaked, right? And post that we have seen negative outflows till 2023. 2024 also, if you see Europe, mostly there are outflows. The Asia is the market where gold ETF inflows have started, but it is still in from a net perspective. If you see, the demand is still very subdued from a gold ETF point of view, right? This is the reasons can be that okay, once post COVID, people thought that okay, economy is coming back, we need, and dollar also started inching back once the interest rate started moving up. So it could have been a factor that from an investment point, people again went back to equities. Equities had a record run during this time, right? So those are the factors due to which probably the from an investment point of view, right, the gold demand has not really seen the spike in the recent years. Now we'll discuss how all these factors together impacted the gold price. So in 2019, dollar strength was neutral, inflation had slightly increased, positive for gold, interest rates had reduced, again a positive for gold, and gold ETFs also had increased. Demand from central bank was flat, so it had a 12% gold price increase in 2019. 2020, we know the pandemic year, dollar depreciated, interest rates were low, gold ETFs increased, equity markets had crashed, leading to a 38% increase in gold prices, this we understand. 2021 was a combination of factors because see, dollar strength had appreciated, which is negative for the gold. Inflation was high, which is positive, but this was a very short-lived inflation because people knew that because it's because of a demand and supply mismatch currently, and also interest rates were bound to go up. So that I think was factored by the market. Demand from central banks had increased, but at the same time we know that the base was lower in 2020. So overall, a net zero return. In 2022 and 2023, I feel the, as we have discussed, while all other factors you can see here, they are mixed, not very supportive of the gold, but the way central banks have been purchasing, and as well as the geopolitical unrest that started with Russia, Ukraine, and then in Israel, Hamas, right? That led to a heavy demand of gold from central banks, especially that de-dollarization trend also started, which continued in 2024, and what we are seeing in 2024 is that now inflation has, which reduced in 2023, now is flattish, is also giving that room of comfort to central banks in order to cut the interest rates, which can be a positive for gold further. The demand from central banks remain high. I doubt if it will cross 1,000 tons in 2024, but it is still relatively high. In my opinion, it will end somewhere around 800 to 900 tons. So that has contributed to 2024 20% increase of gold price. Now we will discuss the outlook of gold in 2025. Central bank demand does not seem to have slowed down. In fact, China, which paused for 6 months, has again started buying in November. India has been buying throughout 2024 and in fact bought 50% of all gold bought by central banks in October. Interest rates across major economies of the world are expected to decline in 2024 in order to provide stimulus for growth. Inflation has remained above the US targets, but the rate cuts have begun in order to provide for growth, which can further lead to higher levels of inflation. There are mixed opinions on dollar strength, and it will depend on the rate cuts by other countries. Because if they follow the rate cuts by US, then we can broadly expect the dollar to be stable. As of now, analyst consensus estimates indicate a stable dollar in 2025. Coming to geopolitical uncertainty, it seems 2025 will see a US China trade war as Trump has been pretty vocal about it. There are Taiwan China disputes which are going on. Russia Ukraine still has not been resolved, but Trump has indicated it was one of his election uh, agenda promises that he will try to just put an end to the Russia Ukraine war. And the other Israel Hamas and US Russia dynamic itself with the sanctions imposed and everything. So geopolitical uncertainty is still there, which is again a positive for gold. So overall, if you see central bank interest rates, inflation, geopolitical uncertainty, in terms of the factors, most of them are aligned with positive movement for the gold rate. But one thing to note here is that gold usually moves in cycles. It will have years of upcycle and then years of stagnation, and that's why on an average, the long-term gold will give you around 9 to 10%. If we note that from 2011 to 2019, I would say there was a pretty stagnant period for gold. Now we are 5 years old in this rally which had started. So I would also be cautious because it's not going to be a very steady rally from here on. It is going to move upwards, but we need to be cautious around these factors to also gauge when the stagnation phase can come in, right? Because it usually happens that way. In from 1990s, if you see, there was a period of again when gold did not do much in terms of returns, but then between 2002 to 2010 11 there was a massive rally in gold that came. So yeah, those are the cycles that the gold follows. We are 5 year old in the up cycle. I still feel that there is room for upside, but I will be very cautiously optimistic on this one. So what should investors presently do, right? First is have 5 to 10% of your portfolio as gold. Don't take bets on gold assuming it will be giving you outsized returns. It is proven that over a longer term, equity returns do better than gold. How gold helps your portfolio is improving the risk adjusted return. That is, the volatility of your portfolio reduces. So effectively every unit of risk or volatility in your portfolio will lead to a higher return. So keep gold 5 to 10% of your portfolios. How to invest in gold? I would say sovereign gold bonds are the best way to invest in gold. But unfortunately, no new series have been introduced by RBI since Feb 2024. So apart from that, I think gold ETFs and physical gold are also decent options. I personally don't find gold mutual fund or digital gold, right? Because digital gold has a high spread, which means that okay, the difference between the buying and the selling price of gold, right? I don't understand why there has to be a high spread in gold, which is a pretty liquid commodity. And for the gold mutual funds, I don't understand why we should be paying or how the expense ratio or the exit load on. gold mutual funds are valid, because in the end we just want to take an exposure to gold. Apart from that, I would suggest, as I discussed, that you need to, the objective of this video was that you learn what are the factors which influence gold. I would really urge you that post completing this video, just read up any article, news article, or anything on gold. My objective is that you should feel a lot better and confident while reading that article, or you should be understanding what this article now means and what are they trying to explain, so that over period you are able to track these indicators yourself and be aware about the market. And as I said, that don't go overboard even if you have a strong conviction, because over long time your equity returns will tend to do good, right? Don't go overboard with gold. Follow your conviction, but again, my view would be have it 5 to 10% of your portfolio. So that's from me in this video. This was my first video. Hope you guys liked it. Uh, I will try to bring one video every week. So if you like it, please hit the like button, share it with your friends, and subscribe to the channel. Thank you.